Hey there, this is Mike Durr, Kingwood Mortgage Guy, and it's the start of the spring home buying season. And I thought it'd be really important to talk to you today about the difference between a pre-qualification and a pre-approval letter. A lot of people think that a pre-qualification and a pre-approval are one and the same. The fact is that they're totally different, and the pre-qualification can really get you in trouble, where the pre-approval, you're going to be much safer when you're going into buying a house. So here's the main difference. A pre-qualification can be issued without any verification whatsoever, just with the borrower telling the loan officer what his income is, how much money he has, what his credit's like. Now that rarely happens, but it does happen. The difference in a pre-approval is a pre-approval is verified. They get documents for the income. The credit is checked. You check what the assets are. You check their identity. You do all these verifications, and you have the file run through an underwriter to make sure that all the information is correct. That way, it's not a fuzzy approval. It's a very strict and very sharply drawn approval. So some people might ask, when should you get pre-approved or pre-qualified, depending on whatever you're going to do? And it's my suggestion that because of the time it takes to find that perfect house, I suggest that you get your pre-approval done about 60 days prior to going into the process. And the reason I like that is that gives you plenty of time to look for a house, find one that you think is perfect, and it's also a short enough time that the information you've provided can still be good. Now, it could happen that if you go to the end of that 60 days, you may have to update some of your financial documents, but that should be no problem, assuming that you're still pre-approved. You might ask, because we expect the market to be robust this spring, as there's been a pent-up demand for houses. But if you go in and put an offer in when there are multiple offers and you have a pre-qualification letter, you may not even be considered. A pre-approval would be the least that I would expect would be worthy if you were in a competitive market. So I can't stress enough that getting pre-approved, it's a much stronger position to be in. So you might ask, okay, what documents do I need to provide? Well, it's pretty simple. You need the driver's license so they can verify your identification. We get bank statements for 2 months. We get paychecks for 30 days. We get W-2s that show the last 2 years of your income, assuming you were with the same employer. If it was different employers, you get the W-2s from all of those employers. In some cases, you might need tax returns, but not always. So I think I got that right. It's ID, it's pay stubs, it's bank statements, and it's W-2s for sure. In some cases, tax returns. So you might ask, does getting pre-approved lock in your interest rate? And the answer is, unfortunately, no. You can't really lock in an interest rate, at least in the world that I live in, until you have a contract on a house. That's really kind of the time when you can actually lock in rates, is when you actually have a house under contract. It's a great question. Hopefully this helped get you clarity on the difference between a pre-qualification and a pre-approval. I encourage you to contact me. I can get these things done for you in a very short time if you give me the information. And I really appreciate you watching this episode, and I look forward to hearing from you. Thanks a lot. This is Mike Durr, Kingwood Mortgage Guy.